Credit cards are everywhere. They have become an integral part of our daily lives, seamlessly blending into our routines. They offer a tempting proposition: buy now, pay later. This allure of instant gratification can be hard to resist, especially when it means getting what you want without waiting. This convenience can be a lifesaver in emergencies or for building credit. When used wisely, credit cards can help you manage unexpected expenses and improve your credit score. However, credit cards can also lead to overwhelming debt if not used responsibly. The ease of spending can quickly spiral out of control, leaving you with a mountain of debt. It's like playing with fire. Without proper management, the very tool that offers convenience can become a source of financial stress and anxiety. You need to know how to handle it, or you'll get burned. Understanding the terms and conditions, interest rates, and fees associated with your credit card is essential. Understanding how credit cards work and how banks profit from them is crucial. Banks make money through interest and fees, and knowing this can help you avoid unnecessary costs. This knowledge empowers you to use credit cards to your advantage, not the banks. By being informed, you can make smarter financial decisions and leverage credit cards to benefit your financial health. Remember, knowledge is power, especially when it comes to your finances. Educate yourself, stay informed, and take control of your financial future with confidence. A credit card is essentially a short-term loan from a bank. It allows you to make purchases without having to pay for them immediately. Instead, the bank covers the cost up front, and you agree to pay the bank back later. When you use your card, you're borrowing money to make a purchase. This can be convenient for managing your cash flow, especially for larger purchases or emergencies. You then have a set period, usually a month, to repay that borrowed amount. This period is known as the billing cycle, and it gives you time to gather the funds needed to pay off your balance. Paying your balance in full and on time means you avoid interest charges. This is the best way to use a credit card, as it allows you to take advantage of the convenience without incurring extra costs. However, if you only make the minimum payment, you'll be charged interest on the remaining balance. This interest can be quite high, often ranging from 15% to 25% annually. This interest can quickly add up, making your purchase much more expensive in the long run. Over time, the amount you owe can grow significantly, especially if you continue to make only the minimum payments. It's like a snowball rolling downhill. The longer it rolls, the bigger it gets. This can lead to a cycle of debt that's hard to break free from, so it's important to manage your credit card use wisely. Banks make money from credit cards in two primary ways: interest and fees. Interest is the percentage charged on your outstanding balance. The higher the interest rate, the more money the bank makes when you carry a balance. Fees can include annual fees, late payment fees, and over-limit fees. These fees contribute to the bank's profits, especially when cardholders aren't diligent about managing their accounts. Remember, banks are in the business of making money, and credit cards are one of their most profitable products. Using credit cards responsibly means avoiding unnecessary debt and maximizing their benefits. Credit cards can be a double-edged sword. They offer convenience and rewards, but can also lead to financial pitfalls if not managed properly. One crucial step is to pay your balance in full each month. This simple habit can save you a significant amount of money in interest charges over time. This prevents interest from accruing and keeps your spending in check. Interest rates on credit cards can be quite high, and carrying a balance can quickly lead to mounting debt. Another essential tip is to create a budget and stick to it. A well-planned budget helps you allocate your income towards necessary expenses, savings, and discretionary spending. Determine how much you can afford to spend each month and track your expenses diligently. Use tools like spreadsheets or financial apps to monitor your spending patterns and adjust as needed. Avoid impulse purchases and prioritize needs over wants. Impulse buying can derail your budget and lead to unnecessary debt. Treat your credit card like cash, only spending what you can afford to repay immediately. This mindset helps you stay within your financial limits and avoid accumulating debt. Remember, credit cards can be valuable tools for managing your finances when used wisely. They offer benefits like rewards, cashback, and fraud protection. By understanding how they work and practicing responsible habits, you can harness their convenience without falling into the debt trap. Educate yourself on the terms and conditions of your credit cards, and always stay informed about your financial health.